Good morning, everyone. Thank you for joining us for this Power webinar series from Golden State Finance Authority and Down Payment Resource. I'm Carolyn Sunseri, and I'll be your host today. Before we get started, I just want to let you all know that you will be getting a copy of the slides after the webinar is over. And there will also be a survey that pops up on your screen. We're hoping that you'll give us a little bit of feedback about this webinar today. Before we get started, I also want to extend a special thank you to our technical host, Dan Wynn, who's going to be supporting us behind the scenes throughout the webinar series. Dan's going to be managing most of the technical aspects of the Zoom platform. And so if anything goes wrong, if you have any questions, please feel free to drop him a line in the chat. He's got us covered. He's going to make sure everything runs smoothly so we can stay focused on the content. In addition, I want to introduce my co-host, Angel Romero. I'm very pleased to have her join us today. She is the Housing Finance Agency Relationship Manager with Down Payment Resource. And she brings with her 20 years of experience in the mortgage industry. She's a seasoned communicator, a strategic partner, and she's known for building strong relationships and helping organizations to market to underserved groups of people. Before joining Down Payment Resource, she actually worked with Cherry Creek Mortgage. She was the assistant VP and post-closing manager and became what was known as the resident DPA expert there. She was very familiar with Down Payment Resource's directory, and so she used that while she was at Cherry Creek Mortgage to help them expand and support homeownership in underserved markets. And so I'm thrilled to have her with us for this entire webinar series today. She's a great asset to us, her information and knowledge about housing finance, and her passion for collaboration and relationships. So with that, I want to, sorry about that. I want to explain the webinar series. This is a 3-part webinar series. So today you are here for part 1, titled Unlock the Power of DPA, Position Yourself as the Go-To Resource. And as we build on this content, we will give you more tips and tools throughout the whole webinar series. So if you haven't already registered for part 2, which is this Thursday, same time, 10:30 at 11:30 a.m., I highly recommend you do so. We're going to continue the conversation about relationship building, networking with real estate agents, and the power of DPA. And then on day 3, which is next Thursday, we're going to cover how to expand your online or digital marketing so that you can grow your influence and market smarter with some tools and tips. We're going to leave you with a discount to some services to help you do that on day 3. So please use the QR codes on your screen and register for all 3 days of this webinar series, if at all possible. And with that, I'd like to ask Angel if she would like to share with us what we're going to be leaving you with today at the end.
Absolutely. Thanks so much for having me, Carolyn. It is so great to work with GSFA. And putting this together, this webinar has been amazing working with you. The key takeaways we're going to take for today is talk about why DPA matters. Why does it matter? What are the myths? And let's talk about how they're just that. They're myths. We're going to be myth busting. We want you to be able to have confident down payment assistance conversations with your agents to LOs, LOs to agents, and all to your consumers. Tools to build trust and attract consumers. And real life experiences, we'll hear from Cindy Tomlinson with US Lending later in the webinar today. And she's got some exciting information to share with us.
Thank you, Angel. And yes, Cindy Tomlinson with US Lending is here with us today. I think it's really impactful when we hear from actual loan officers out there working with down payment assistance, not just GSFA's programs, but all the different down payment assistance programs, and what her experiences are working with buyers, working with sellers, working with agents. So I'm excited to have her a part of this discussion. We are recording today, so we will post all of these webinars up on our YouTube channel within a short period of time after the live sessions. So if somebody else wants to look at the content or review what we've covered, we'll be able to do that online. So we know we're all here, we've heard about down payment assistance. We all at least are on board that there is an issue out there with affordability, and we are looking for some solutions to that. We know the statistics. I'm sure everyone here on this webinar has heard these before. You know, here's a study from the Urban Institute in 2018. They have revisited this study and said it's still relevant today. 68% of the respondents to this survey said that their number one barrier to home ownership was coming up with the cash resources for a down payment. That's 6 out of 10 borrowers, almost 7 out of 10 borrowers. We know the reasons why. We've got issues with housing, inventory. We've got issues with qualifying aspects, high rent, student loan debt. Those are just a few of them. But I want to talk a little bit further about the secondary problems. In this same study, it was identified that 2/3 of the respondents said that they still thought they needed a 15% down payment or more, 15% or more in order to buy a home. Now that's 65%, 2/3 of the respondent. That is a huge amount of people that are under a myth here that you need a large down payment to buy a home. And then another 76% of these respondents said that they have little or no familiarity with down payment programs or with low down payment programs. Again, that's 7 out of 10 of your borrowers out there. So this is a massive problem. It is something that maybe all of you are hearing when you're doing business out there. People who want to stop renting, want to get into home ownership, maybe even they're saving money to do that, but here they are deciding, you know, I doubt I qualify, or I don't think I've saved enough. I have friends who have told me this. We're still saving, you know, we've got 15% and get to 20 or 30% before we buy a home. And this is what we're really going to dive into. The value of DPA, but the value of breaking down the barriers to information and all of these myths and misconceptions about what people need in terms of down payment assistance to get into a home. We know it's available. We know home buyers need it. We know real estate agents need down payment assistance loan officers to offer these programs. We know loan officers have buy-in. They want to close purchase applications. So where is the disconnect? And with that, I first want to ask for some participation from all of you on today's webinar.
So we want to hear from all of you. We're going to take a quick anonymous poll now, and it'll take less than a minute, and it's going to help us guide today's conversation. And if there's more you want to add aside from the options that are there on the poll, please make sure to use the chat. The poll should be popping up on your screen now, and you just click to participate.
For those of you who may be joining us, we wanted to ask all of you for some feedback on what kind of myths and misconceptions you may be hearing out there from your buyers, from your agents, from anyone. And this will give us a little bit more information for how to direct today's conversation. Poll should be up on your screen. Thank you. Okay, we'll just give it a couple more seconds here for anyone else to get in their answers. Thank you so much for your feedback. All right, Dan, would you like to close the poll for us? We'll look at the results here. Okay, so looking at this, what I am seeing, Angel, is some of these top categories, 50% or more have said this is an issue. We've got only for first-time homebuyers. We've got only for low-income borrowers. If there is a repayment, if it usually has to be repaid, it maybe is not worth it, and it's slowing down that closing process. There's a few others on here as well. If you get a moment, Angel, and you can check the chat for us, maybe you can jot down some of these other things that are coming up. And then we've got some people saying issues with people thinking it's only for good credit borrowers or limited in jurisdiction. Some of these we hear a lot.
Yes.
But I want to include anything that also comes in randomly as well. So thank you all for participating. This is great feedback. And with that, I'm going to close this and we will continue our discussion around myths and misconceptions.
And
So,
there were some,
sorry, go ahead.
Carolyn.
No
There were
worries.
some good things that came in through the chat. A couple that I was able to grab right off the top is that they're too complicated. There are too many hurdles. The other was a reluctance of listing agents to accept offers because they think there's a bigger risk with these buyers. Those are great things that we also hear pretty often on top of those most common things that we had listed on the poll.
Okay, I made a note of those, and I think we can cover these when we talk about barriers and some solutions for everyone on the call. Thank you very much. If you see any others, just note them down for us, Angel, and we can cover them.
Absolutely.
So I assumed a few of these were going to come up. So let's talk about these. First time home buyers. Here's that myth, only for first time home buyers. I'm going to speak mostly to the GSFA programs, but I'm going to have you chime in when you want as well. Angel, let me close this. There we go. The GSFA programs in particular happen to be very flexible, very accessible. So I'm going to speak to that. We're going to do additional education around the GSFA down payment assistance programs on day 2. So please join us because, like I said, these webinars build on each other. We're going to go further into the programs that GSFA offers and relationship building with real estate agents on day 2. But when it comes to the GSFA down payment assistance programs, GSFA has no limitations on whether the buyer is a first-time buyer or a repeat buyer. And what does that mean to our attendees? What does this mean to our loan officers and our agents? I like to think of the people who maybe are returning to the home buyer market that get forgotten. For example, I have had friends who have gone through, and myself as well, gone through big changes in your life. Maybe it's a huge move to another area or a new job, or maybe it's a change in relationship status. And those things can mean selling a property and buying a new one, or maybe you were secondary on a loan and now you're getting your own loan. And I think sometimes we forget these borrowers. We forget that circumstances may put you back, in a sense, at ground zero, starting to save
Yeah.
money again.
And don't forget your empty nesters, Carolyn.
Yes, I think that's a
Those
really
are,
good point.
yes.
So programs, down payment assistance is not just for your first time home buyer. It is
No.
also for people returning to the buying market. And with the GSFA programs, you can even own a home today, qualify for down payment assistance for a new home that you're going to be moving into as your owner occupied primary residence. And I know with down payment resource, there's some other programs that aren't limited to first time home buyers either, right?
Yes, that is absolutely correct. There are so many programs available, and we look on both a national and a state level, and we see that the information that we see with the programs nationally tends to flow through on the state level as well. Sometimes you're here, oh, it's not available in my county, or the again, I'm not a first time home buyer, but there are programs available in every county across the United States for down payment assistance. Um, and one of the other things that you mentioned was how GSFA is not just for first time home buyers. It's amazing how many people still think, because of their, let's say, lack of contact with down payment assistance, or inability to provide that previously. They When they think of down payment assistance, it's for those first time home buyers. But no, GSFA is one of the magical unicorns that says we are not just for first time home buyers, we are for repeat buyers. And there are so many other programs available both nationally, and multiple programs available in the state of California that also are for repeat buyers.
And the reason we're talking a little bit longer here about these facts and myths is we want to dispel these barriers to closing, loans and getting people into homes for the real estate agent and the loan officers too. Because if you as a loan officer or agent are under misconceptions about DPA, you're going to filter your clients and decide that they're not in a position for this. Not just the buyer out there filtering himself, right? Not just somebody out there going, well, I'm not a first time home buyer. Why would I look into down payment assistance? There's a lot of value to DPA that goes beyond just down payment money for people with no money, right?
Yes.
That's another big myth that people think you have to have no money to. Why would you want to access down payment assistance unless you don't have any money?
Right. And it's leveraging and creating more sustainable home buyers as well. When you've got a buyer who has 20,000 in the bank and they've saved up that 3 or 5%, and you say, "Oh, my borrower has their down payment. They've done well." What are you leaving in their account? What happens when they have a major life event or a major household event in the first 12 to 36 months of home ownership, regardless of whether they're a first time or repeat buyer? They're going to look back and say, my LO took care of me. My realtor, my lender took care of me because they allowed me to keep that savings where it needed to be. And a repair was needed, or I lost my job, and the first thought in my head didn't have to be, am I going to lose my home? So it creates more sustainable buyers, as well as giving them the ability to leverage the funds that they do have access to.
That's a great point. And even looking at houses that maybe need some work on it, by
Yes,
using DPA and holding on to their cash resources, maybe that's a perfect house because they have a little money to fix up that front yard or to deal with that water heater that's about to go out, right?
absolutely.
And then there's
Absolutely.
Then there's the really high one. 56% of our respondents today said that there's that misnomer about you've got to have low income. The DPA is for low income borrowers, but that's just not the case. The
No.
GSFA programs allow qualifying income up to I think it's around 140% of AMI. I put a couple of examples on the slide because if they're going with conventional financing, GSFA's programs allow the qualifying income of the applicant to be in Riverside County as high as 196,000. I put another one on here, Contra Costa, 284,000, and still qualify for down payment assistance. And like I said, we're going to get further into these guidelines around the GSFA programs on Thursday in part 2. But that is qualifying income, not household, which offers a little bit more flexibility as well. Let's see, we also saw this one around, I've got on here, is it only for people with good credit? I don't think a FICO score of 620 is perfect credit.
No.
I think that really allows for some flexibility for people who have less than perfect credit and
And
some. Go ahead.
I like to say, don't forget your 700 borrowers, your 720
Yes.
borrowers as well. And I love the range, Carolyn. It's you can go as low as 620, but remember what we just talked about is making sure that you're giving all your borrowers the ability to leverage what's there. So I know there's statistics, I don't know them off the top, but statistically, there are a ton of millennials out there that are mortgage ready. They have the great credit scores, they're paying their bills, but they don't have that savings put back. So those are borrowers that may be sidelining themselves, that you as a lender or an LO or a realtor can go, hey, we offer down payment assistance, and that's great. You have a 720 score, you have 284K in income annually, and you want to buy in Contra Costa, you qualify for a GSFA down payment assistance program.
Yeah, thank you. And then looking at some of these others, we figured some of these would come up. One of the highest in our survey today was, if there's some repayment required, is there any value? But again, if you're accessing down payment assistance, you're freeing up that personal cash for improvements on the property, safety net. We all know what it's been like to go through the pandemic and the uncertainty around that and people's jobs. And with the down payment assistance through Golden State Finance Authority, there's no prepayment penalty. So let's say they go into this right now and they're thinking, I'm going to save my cash up a couple years in. They're like, I'd like to get rid of that down payment assistance loan that I have now. They can do that without any kind of a prepayment penalty. And again, on Thursday, we're going to show you how much value that is, even when there may be a payment on it. Some of these others that came up, the programs with GSFA are not limited in jurisdiction. They are available throughout the entire state of California. And this one where 52% of our respondents said that they're worried that it slows down escrow. What do you think about that one, Angel?
Slows down escrow and closing. I have 2 words for that: education and process. And you can take training with your DPA providers, and becoming the DPA expert, make sure that you know how the process flow goes. It's get on the phone with GSFA when you have a question about your loan. If you've looked, you've spent more than 5 or 10 minutes, call your client. Call your client representative and say, hey, I have a question. My borrower has this, this, and this, and I want to know if I can do this. Here's how I'm reading the guidelines. As long as you implement process, you're going to flow through doing a GSFA loan the same you are a standalone FHA conventional, and USDA, Freddie, it doesn't matter. It's setting up that process and having the knowledge of the program. And that touches on the other question or the other comment that we got in the chat, that there's a reluctance of listing agents to accept offers that have DPA because they think their buyers are a bigger risk. Well, here's how I answer that question. My buyer's already qualified for their down payment assistance through GSFA. That's guaranteed money at the table. That money's not going away. I'm not going to go, I'm not going to have my down payment in an account where I went and spent it. Oops, now I don't have the money that I need to come to the closing table with. Or something happened to the gift that I was receiving, and now those funds aren't going to be at the table. What am I going to? Your funds are guaranteed because your borrower has already qualified for GSFA and they have their down payment assistance there and ready to go at closing. So those are less risky borrowers. And that's something that you can help as an LO or even as a real estate agent to help educate other agents that these borrowers not only qualified for their first mortgage, but they've already qualified for the DPA. So those funds are there. They're double qualified. They're X-Men qualified. So it's just showing people that no, these are not risky buyers. And I've got a 680 buyer that's using a down payment assistance program. I just want to make sure that we're getting that information across, that that's not the case.
I agree. And you're going to hear throughout this entire webinar series, Angel and I are going to say over and over the importance of communication between a loan officer and an agent and a buyer. There is a triangle there that is essential to be successful. If you have an agent who is worried that these are complicated programs and is discouraging a buyer or discouraging a seller, they need education. So you as that loan officer, who are you working with? Are they confident about these programs that you have to offer? And the only way to do that is by you communicating with them, taking them through it, the process, addressing any of their feedback and concerns, and showing them that working with these programs is not complicated. And, there are some programs out there that are very specialized. We had a program that was funded through money from the state last year, called Recover California Homebuyer Assistance. I think that might still be a little bit of money active today, but that is not a GSFA sponsored program. It was money given to us by, I'm forgetting the department from the state that allocated the money for wildfire recovery. And they had a lot of guidelines. And yes, there was a bit more paperwork, but the standard down payment assistance programs from GSFA, which are named Platinum and Golden Opportunities, and you can read about them on our website, are simple. There is a delegation of that entire loan process to our lender. The lender comes to us to lock in the rate, get a commitment on the amount of down payment assistance that comes with that first mortgage. We provide them the loan docs through our reservation system already auto-filled, and then we delegate that processing, closing, and everything to the lenders. So there's no additional review where they're sending file back to us. So those two are our standard down payment assistance programs are very easy for the lender to use. And if you're a loan officer, get out there, educate the real estate agents that you're working with today about this so that you are not losing applications on that side of the table, on the real estate end of the table, because they don't want to talk about DPA or they're hesitant to have a buyer with DPA. Any other things you want to cover on this? We talked about reluctance to accept offers and too complicated.
Yeah, I just wanted to share, and I know there are tons of stats that you hear out there, but a stat that we looked at Down Payment Resource, we looked at decline loan analysis across the top 10 MSAs in the US. And we looked at loans that were only declined for cash to close or debt to income, the two major things that utilizing down payment assistance can affect. And we found across those 10 top 10 MSAs that 33% of declined loans could have been salvaged with
Wow.
utilizing down payment assistance. And these were borrowers that, per the guidelines, per the the credit score, where the home was, the income limits, that would have qualified for down payment assistance. So if you think about 33%, that's 3 out of every 10 roughly of your decline loans that, if you look
Maybe.
at utilizing a down payment assistance program, could possibly be salvaged.
Wow. That's impactful. I mean, that's a lot. 3 out of 10 borrowers.
Yeah.
So let's talk about how buyers are making decisions, because this is also an important aspect of the relationship of the real estate agents and the loan officers to buyers. I want to share some stats, and then I want to bring in our guest speaker to talk about her experiences in the field. First, let's look at a study from an organization called Cultural Outreach, which is an arm of the National Association of Minority Mortgage Bankers of America, NAMBA. Cultural Outreach did a study in 2022, and of the respondents, 1,000 participants in this study, 50% male, 50% female, aging in ranges 18 to 41. They were asked, how do they find their loan officer? And there's a lot on this slide, but I mean, this is important. We are looking at this chart in the center, and 24% were getting their loan officer through a recommendation from their real estate agent. That's huge. It's almost 1 in 3. 15% online searches, and we know that has dramatically increased in the last decade. 32% friends and family, recommendations from friends and family. 59% of the respondents said that reviews on a loan officer were extremely important to them. Reviews, where were they getting them? Google, real estate listings, and then only 24% didn't read reviews. I mean, there's a lot of people looking for information on the internet, looking for recommendations from their friends and families and real estate agents in order to find a loan officer. That's crazy to me. I mean, that's a lot of influence.
Yeah, absolutely, Carolyn. It's just amazing how much that people are going on and saying, what did 10 other people say about their experience?
Right. Same kind of review here when you're looking at how they're finding realtors. 60% said that online reviews of an agent were extremely important to them in choosing their real estate agent. How many people are posting or sharing reviews done on their business? How many of you loan officers have a website somewhere, Google, Zillow, somewhere, your own website, your company's website, where you share reviews from your customers so that other people see them as well? Whether you're a real estate agent or a loan officer, this is important. This is big. Same kind of statistics here on the number of referrals from friends and family. 39% are finding their real estate agent through friends and family referrals, or 25% from online searches. This is interesting to me. Now, let's talk about some of the factors involved in this buyer behavior. A J.D. Power study in 2023 said that more than 2/3 of buyers are choosing lenders for reasons beyond interest rate. I hear it all the time from loan officers, and I get it. I get their concern. Rates are high. Even down payment assistance programs, the rates are higher than they used to be. I understand the concern, but when I see studies like this, it says 69% of the buyers are choosing their lender beyond just who has the lowest interest rate out there. That's important. You're going to be selling off of value. Can't change interest rates, right? I mean, we really can't do a whole lot in that area. But if they're looking to you for personalized service, ability to navigate the different products and things out there, your experience, that's important, more important than them rate shopping. They're not necessarily going to rate shop. Reputation, a leading factor in choosing lender. This is a study through the Federal Housing Finance Agency and Consumer Finance Protection Bureau in 2022. 76% of purchase applicants said reputation was a primary factor for choosing a lender. 71% of refinancers said reputation was a primary factor for choosing a lender. And then on this topic of rate shopping, it looks like my red circle here is a little off. 56% got an offer from one lender and didn't seek out additional rates. Why? Because trust, reputation, those things were important. The lender's knowledge. You know, I know we all worry about rate shopping, but these studies, this is a study from Lending Tree, are saying this is not as influential as you think it is. How about the influence that real estate agents have? Most home buyers meet with a real estate agent before talking with a mortgage lender, 51%. This is another study from Lending Tree. Huge amount of referrals are coming from real estate agents. All of you who are on today's call, how close are your relationships with your real estate agents? And if you're offering down payment assistance, what are you doing to talk to them about DPA?
Absolutely. And I have one thing to add there, Carolyn. The very top question that I still receive today when I am doing any type of education on down payment assistance with realtors is, how do I find an LO that does DPA? Still.
Yeah, I would agree. We do some education through the California Association of Realtors, through CAR, you and I, and what do we hear from real estate agents? Okay, this is great. You've got my buy-in. I understand the value of DPA. How do I get a hold of a DPA loan officer?
Yep.
So for the loan officers on the call today, you know, you're not going to be able to educate every real estate agent out there, but you can create a network so that in your area, you've got some real estate agents who are educated and can refer business back to you. These webinars are going to build. We're going to talk more about relationships. And with that, I would like to talk about the influence that customers have who have closed with DPA, people who've gotten DPA, how much influence they have on referring other customers. I'd like to bring in our guest speaker, Cindy Tomlinson. And it's my pleasure to introduce her. She is a branch manager with US Lending in Redding, California. She has over 25 years of experience in the mortgage industry. She's known for thoughtful guidance, strong client relationships, and a deep expertise in home financing. Her dedication has earned the trust of real estate partners and repeat clients alike. She's going to talk about that. She's a proud member of the North State community. She's raised her family there. She's now enjoying life as a grandparent. Her passion for helping people achieve home ownership is clear and inspiring, and we're thrilled to have her here today to join us in this conversation. Cindy, I'm going to bring you up on the screen here. We'll have you turn on your video and join us. There she is.
Hi, Cindy.
How are you? Everyone hear me okay?
Yes. Yes, good. It's so great to see you. And I'm going to kick off,
thanks
Cindy.
For having me.
Yeah, we're excited. I'm going to kick off with the first question. I wanted to ask about how GSFA and down payment assistance has played a role in helping your clients become homeowners, achieve homeownership?
Yeah, it's actually played a very pivotal role. Where I'm at is in northern California, like the true northern California, and between Sacramento and Oregon. We have a lot of first-time home buyers this way. We have manufactured homes this way. Like you guys were speaking of earlier, there's a lot of buyers that just don't have the means to like come up with their down payment or closing cost. And so for me, we've really leaned into like what options we have for these first-time home buyers. If you circle back to, I don't know, 15 years ago or so, it was very USDA forward. Like we are a USDA territory for some of the outskirt areas. And I have to say, like, I probably have closed one USDA loan to 100 down payment assistance loans in the last like 2 years, just or 3 years maybe. Just because they're just not as number one, um, the debt to income ratios are a little bit tighter with the USDA. Number two, our main area of Reading is not eligible. So it limited people that were doing the 100% down payment to like the outskirt areas. Um, One little key thing that I've actually had some success with the down with GSFA is I've had several files where I've had an FHA buyer. They have their 3.5% down, but they don't have their closing cost. And so what we do is with the realtor and the lenders, we all get together and we go, okay, well, we need, I don't know, a $15,000 seller credit to pay those closing costs. So we get into contract, we're doing an FHA loan, and now we get the appraisal back. And, sometimes appraisers see those concessions in there and they have their opinion of value. And let's just say the appraisal comes in $10,000 light. So what we've been able to do strategically to keep those escrows together is to say, okay, well, let's ditch the regular FHA. Let's have the borrower move their money that they were paying for the down payment, pay their own closing costs, and let's use the GSFA vehicle for the down payment portion. Then the buyer keeps the house. The seller doesn't have to give concessions for closing cost, and everybody moves on their merry way. So that's been really kind of a cool trick that not a lot of people think about when they're dealing with FHA and closing cost credits, and then have a light appraisal.
So
Yeah.
that's more money to the seller, right?
Yeah, it is. Well,
Yay,
technically,
made.
it could be. It could be depending upon that appraisal. Usually, in the case of it's $10,000 off, we'll say the appraisal is $10,000 light. So now we have to bring the purchase price down 10,000 to match. So the seller's no longer giving up that closing cost that was added to the price.
Sure. Right. They're not having to do the seller concessions. Yeah. Yeah. Thank you. I think that's a great way to strategically use the down payment assistance.
Yes.
How many of your clients do you think, all of your purchase clients that you're doing, how many do you think you put into down payment assistance?
Oh, I'd probably say a good 10%. I probably should have looked that number up, but I mean, we definitely do utilize the program on purchase transactions quite a bit. So maybe 8 to 10%. I have buyers that have, moving up buyers or moving down buyers that have down payment. One thing that I learned, I think about a year ago, is I didn't know this, but I know it now. You could actually own a home and still do a new purchase on a transaction using the GSFA program. So that's been kind of a cool tool to use too, just because we have buyers that don't want to go contingent and maybe they qualify, maybe they're going to rent out to parting. So yeah.
Yeah. And then how about people who are not first time home buyers? Do you run into that very often?
Oh, absolutely. Absolutely. And it's one of the leaders that we look at as a branch. As myself personally, I do a lot of production, and a lot of people don't have the equity in their home, or maybe they want to use whatever equity if they're selling a house to buy a house to use for renovations or moving expenses. So that's definitely something that we look at on every transaction, like if it's going to make sense.
Mm-hmm. So I was sharing stats we were talking about trust and reputation. What's your experience with building trust and that being a big factor in acquiring clients and being successful?
Well, for me personally, I mean, I've been very, I lead with, I want to give somebody a good experience. I want to give them options of what they have available to them, educate them on the different pros and cons of the programs that they're going into. But for me, I just feel like I've built such a long history of like repeat clients, and now I'm doing loans for kids of the repeat clients, and I don't know that I'll stick around to do the grandkids of the repeat clients, but it's just, I think trust is important, especially it doesn't matter if you're in a big demographic area. I mean, our county population appears about 200,000 in a, pre-COVID years. I was closing, 300 transactions easy every year. It was kind of a sure thing. During COVID, I, originated over 650 each of those crazy rate years. And I probably could have done more if I could have worked more, but I mean, I was already, pushing my limits there. But I guess where I'm going with those numbers is it's not a toot of a horn. It's just I wouldn't have those numbers if it wasn't for people trusting me. And that's the realtors in our community, the clients, the friends of the clients. And, it's a very special thing to be able to give somebody, a good service and be honest with them, and not just throw them into a program just to collect a paycheck.
How many do you think of your applicants, how many are repeat versus new ones that you're acquiring?
About 50%. They're
That's a lot.
Yeah, they're repeat, not necessarily they're the repeat, but they're a referral from a repeat.
Sure. Yeah.
Yeah. So it's about 50%. And then the next runner up, I would say, is realtors and affiliates for referral source. So I did do, you touched on that California Recovery Program, and we did, as a branch, several of those because we fit the parameters of it. And, a lot of people in our community that do what I do were not doing those transactions because they were not an income. They were not, you don't make any money on those as a loan officer. I mean, as a branch, they're, I'm not saying anything negative about the program, so please don't take it that way. But yeah, I think I funded a $11,000 loan on one of them.
Isn't that crazy?
Yeah. I think that, for that, you lead with, I don't know, like, again, it goes back to the trust thing. This is definitely helping a family. It's helping a client. Hopefully it's building what you get, what you give. And I feel like, today I opened escrow, one of those transactions, the realtor said, I'm going to give you, another transaction when I get it. And 8 months later, he sent me a file, and now we've got an escrow today. So, there's a lot of good programs that come out of your, the GSFA. I mean, the California Recovery, we all kicked and moaned about it because it was something new to learn about, but we had that down pretty well up here. And I feel like very proud of my company that we offered it. We didn't throw our nose up at it like some other branches in town were like, no, I can't do a loan under, $50,000 or whatnot. And it gave something back to people that might not have ever owned a home before.
Well, and that I think speaks to this whole relationship building, trust, reputation, because the program she's referring to, for those of you on today's webinar, was called Recover California Homebuyer Assistance, and it provided up to $350,000 in down payment assistance to borrowers that could qualify for a mortgage up to, I think it was like 41% debt to income ratio, somewhere around there. You qualify the borrower for as much as they can afford in a mortgage. And then on top of that, this program provided them up to $350,000 so that they could actually purchase a home at the prices today. These were people who were in high fire zone areas in previous years, whether they were renting or owning. And this program was funded through the state, and we were hired as an HFA to administer it. And we do administer programs on behalf of other entities at times. It was a huge opportunity for people in high fire zone areas or impacted during wildfires in past years to get into home ownership when they never would have been able to because they would never maybe had enough income to qualify. So it was very targeted, but it had such tremendous impact on those people's lives. It was limited in funding, but again, very, very impacting. But as a loan officer, you chose to participate in that program, which is a little bit more complicated because you were changing someone's life. And those people will go on and talk about their experience with you, what this program did for them. The real estate agents remember your relationship with them and this program. And I know that you are one of our top loan officers in doing the other GSFA programs, but you're positioning yourself in Reading as a DPA expert, as somebody who is out there trying to create home ownership opportunity. And I think that that carries across. I mean, you have 50% referral business or repeat. And so I think when loan officers are looking at programs and participating in these DPA, this DPA realm, it's a long game. It's not just the short game. It's not just, you know, how much money am I making off of the loans in this year? You're building a network of business for the future. You're building referrals with loan officers through your reputation, through trust. You're building referrals from your clients.
Yeah.
So what tips do you have? What tips or tactics would you give to other loan officers about establishing strong relationships with the real estate agents?
Well, I feel like a lot of the development of real estate agents and the relationships is just, you know, you got to trust who you work with, you got to like who you work with, and those are two big things for sure. Having the confidence to talk about programs. I mean, you don't want to, for me, I would never want to talk about something that I really don't know what I'm talking about because people could read mostly through that. So I wouldn't be intimidated by down payment assistance programs and like the technical part of like, oh my goodness, how do I set this file up in Encompass or whatever other LOS you're using? I would just read through them or try to come up with some, you know, bullet notes and rehearse the communication a little bit, you know, collaborate with maybe a fellow loan officer and set up scenarios and look at what the payment looks like. I mean, I you know, being in my role, I could do tech, trust me, but I wasn't always the one setting up all of the little, you know, okay, we got to do 3.5%, 5%, whatever of the gross loan amounts and all of the different fundamentals. I wouldn't get overloaded by that. But what I would stress to do when you're trying to market down payment assistance with realtors or with your referral partners is just educate them on like the little dumbed down notes of it, the benefits of like, you could actually not have to ask for a seller credit. The buyer has their 3.5% and we could use down payment assistance to pay the down payment and use their money for closing costs because most buyers on a first time home buyer or, you know, low down payment home buyer, they don't have both down payment and closing cost. So try to just come up with different nuggets of information that might make it seem like it is easier to get a house because we could actually utilize this program or I don't know. I think that just as I do with my loan officers here and myself, it's just get little nuggets of information. You don't need to make it so confusing and overload somebody with too much information, but just share benefits, share success stories, and you know, you could drop in those little things just like I did in the beginning of, hey, we came in short on an appraisal and I'm like, hey, we're not losing this deal. Let's use this vehicle instead. And I don't know.
Yeah, I agree. When Angela and I do education work with real estate agents, we talk about that. You don't need to be an expert as a real estate agent. You don't need to know all the guidelines, but you need to be able to talk to that value at a certain level.
Right.
The value it's going to have for you as a buyer, and then link them to a loan officer. I want to thank you for being here today. I really appreciate hearing from our loan officers out in the field, getting your feedback.
I appreciate you thinking of me up here.
All right.
Thank you, Cindy.
Thanks.
With that, we're going to talk a little bit more how to connect with DPA lenders like Cindy and the many other loan officers that we have that are participating in the GSFA programs. The GSFA DPA lenders are listed on our website at gsfahome.org. You can find the corporate entities and branch offices there. We're going to be posting our top loan officers once again on our website, which is a great advantage to buyers because they can see specific people in their areas that are very experienced in working with the GSFA programs. We're going to update that listing on the website in July. Cindy's going to be on that list. And then if you want to get approved, if you're a loan officer that's not approved today with GSFA, you can contact us and our client relations team will walk you through that. The information about that process for approval is also listed on our website at gsfahome.org. Angel, now GSFA is not the only program that offers down payment assistance, and you work for Down Payment Resource, which has a whole directory. Would you like to share what the value is of this Down Payment Resource directory?
Absolutely. So you had mentioned previously in my lender life, which was over 20 years, the last 7 years that I was with Cherry Creek Mortgage, I had the great ability to work as a vendor with Down Payment Resource. Down Payment Resource was a vendor for me, and it enabled me to be able to grow and utilize our DPA programs so much more than not having that additional resource. And I'm not a pat on the back or a little bit of a pat on the back. I was all things down payment assistance when I was with my previous lender before coming to Down Payment Resource. And the two words I brought up earlier, education and process, utilizing Down Payment Resource gave me the ability to put education and process into play. And what I love to be able to boast is that for the last 6 years, when I was doing nothing but down payment assistance with Cherry Creek Mortgage, one repurchase. And I know that's something that lenders look at. Well, oh, if I break a DPA loan, it's there. Utilizing Down Payment Resource gives you instant access to link your programs and set up what's available to your teams. You can go to downpaymentresource.com. And as you see on the screen, what are you looking to buy? So all you have to do is click on Find Down Payment Help. You put in the bullet points of information, and the more accurate you are, there's that little box that says matched programs that's on the PowerPoint slide. As you put in each piece of information, I think there's a total of maybe 10 to 12 data points. It will pull up all of the programs that your borrower, you as a borrower or an LO that you're a borrower or a real estate agent that your borrower will qualify for. So that's a free tool. We also partner with lenders, MLSs, Zillow, realtor.com, redfin.com. And something Cindy brought up that I want to touch on is we're also built into Encompass. So for lenders, if you work with Encompass and partner with Down Payment Resource, as you're putting a file into Encompass, it will tell you, oh, your borrower qualifies for these programs. So lots of different tools available.
Yes, and the GSFA programs are listed on Down Payment Resource as
Yes.
well. So before we close out, I want to really quickly set up our next webinar, because we're going to get into this even further. The importance of creating strong lender-realtor relationships. It's so important that you create this team, right? And that you create value-added services between the two of you. Buy-in from your real estate agent on working with you requires a lot of different things. Open communication, positioning yourself as a team, referral reciprocity, being open to feedback to improve how that transaction went. You've got to be open. Maybe there's improvement in communication is necessary. And co-marketing, a huge opportunity. We're going to get into co-marketing. We're going to get into digital marketing on day 3. With that, I would like to ask you, Angel, what did we gain from today? And then we'll talk about what we're going to look for at part 2.
So in review, DPA helps overcome the #1 buyer barrier to homeownership. It's flexible and accessible, trusted guidance, being able to guide your buyers, LOs, realtors will drive your business growth. And make sure that you're building strong lender agent relationships. They're indispensable. And don't forget that part of your team is your provider. They want you picking up the phone or sending them an email.
Yes, the Client Relations Department at GSFA is here Monday through Friday, 8 to 5, to guide, whether you're an agent or a loan officer, to guide you to better understanding the program, including online trainings that we give weekly. I want to thank everyone for being here today, for talking about down payment assistance and the opportunities that it can provide. Please join us for day 2. It's on Thursday, same time, part 2, where we get into info to action, matching the buyers with the right GSFA programs. We're going to have a guest speaker talking more about the importance of lender-realtor relationships and his experience. Day 3, next Tuesday, part 3, growing your influence and marketing smarter. We're going to leave you with actual usable tools for expanding your online presence and digital marketing. Please, QR codes are on your screen. We hope that you will join us for part 2 and part 3. I want to thank Cindy. Thank you, Angel. Thank you, Dan, for helping us to facilitate this webinar today. When I close this out, a survey is going to pop up on your screen. Please give us some feedback. We'll be sending out a copy of the slide presentation to the attendees within a short period of time and posting the recording up on the YouTube site shortly. Thank you all for being a part of making homeownership more possible in California.